Hi guys, it's Annika here with TipRanks, and today I want to talk about how Moderna has been on the watch list for many different hedge funds and how people deem it to be a buy. And this is because of a few reasons which I will go through in this video. Moderna, whose ticker is MRNA, currently is priced at $344. The analyst price target on Moderna is 366.56 cents, based on 13 Wall Street analyst ratings offering 12-month price targets. The current analyst rating consensus is fairly mixed, with 5 a buy, 5 a hold, and 3 a sell. Moderna is a biotechnology company that develops therapeutics and vaccines based on messenger RNA for the treatment and prevention of various life-threatening diseases. Moderna's stock has surged in 2021 as its mRNA vaccine against COVID-19 has delivered historically high revenue, profits, and free cash flow. In fact, investors have been enthusiastic about the business prospects of Moderna as its shares have gains of about 208% so far in 2021 and are up about 378% on a yearly basis. So what has been the reason for such mixed responses? Some analysts are saying to hold, some are saying to buy, and some are saying to sell. Well, the reasons for some of the bearish stances is because Moderna potentially may have abnormal business operations. So Moderna, as a biotechnology company from 2016 to 2020, was actually struggling to generate revenue growth and was consistently losing money. The unexpected pandemic then occurred, and in 2020, Moderna reported a surge of 1,234.34% in revenue, with sales of 803.4 million compared to the revenue of 60.21 million in 2019. As you can see on this earnings and revenues chart on TipRanks, you can see that until 2020, Moderna had consistently widening net losses. And even in 2020, with the surge of revenue, its net losses continued to be wider than in 2019. This year, however, has been a great year for Moderna. Revenue in Q1 2021 increased 239.4% quarter over quarter to $1.94 billion. Net profit came in at $1.22 billion. Q2 of 2021 was even better, with revenue of $4.35 billion and net income of $2.78 billion. As well, Moderna reported a free cash flow of $4.02 billion. For the whole fiscal year of 2020, free cash flow reported was $1.95 billion. 2021 has been a phenomenal year for Moderna. This leaves us with two questions. Are all these profits and earnings that we're seeing in 2021 sustainable? And the second, is the Moderna stock expensive or cheap? Well, one of the risks is that there is uncertainty in growth rates. We don't know when the global pandemic will end. With Delta and Mu variants present and the need to vaccinate children and provide better booster shots to large amounts of people in the global population, the momentum for Moderna may continue into late 2021 and beginning 2022. As we can see on TipRanks risk factors, there are 98 risks, and the majority are in tech and innovation. The second would be 22% in finance and corporate, and thirdly, legal and regulatory, which makes sense as vaccines need to get their approvals and get the legal and regulatory approvals that are required to be delivered to the public. But many analysts believe that the following year will be different as the year progresses in 2022. The average analyst expectation for 2021 revenue for Moderna is $20.2 billion. This will be an unprecedented figure of revenue. And in 2022, the average analyst prediction for Moderna is around $20.1 billion in revenue. The analyst average estimate for revenue in 2022 tells us one thing, in that most of them believe that the hyper-growth revenues that we've seen from Moderna will calm down. However, if the revenues in 2022 are in line with what we achieve in 2021, then this leaves plenty of room for lots of investors to fuel the current prices movement, despite the fact that there are still some sell-offs for the Moderna stock. Moderna has a strong balance sheet, and although it has increased its debt levels for both Q1 2021 and Q2 2021, this isn't a major issue. For Q2 2021, Moderna reported cash and short-term investments of $8 billion. Comparing its price-to-sales Q2 ratio of 20.9 with the price-to-sales ratios of 3.3 and 2.3 for the biotechnology and pharmaceuticals industry and the healthcare sector as a whole, Moderna trades at a large premium. This could mean that it is potentially overvalued in price. which is why some of the analysts have deemed it to be a hold or a sell. The price to free cash flow in Q2 of Moderna is 16, compared to the figures of 9 and 10.5 for the industry and sector respectively. Despite all of this, Moderna's stock has been given a smart score of 10 on TipRanks. A 10 is the highest smart score you can get, and this means that it is most likely to outperform the market, whereas any score under 5 means that it is more likely to underperform the market, and anything over 5 means it is more likely to outperform the market. So a smart score of 10 for Moderna is fantastic, despite the fact that analyst ratings are mainly a hold. But we saw it was fairly split 50-50 between hold and buy. And we have blogger opinions as bullish, news sentiment is also bullish, and hedge fund activity has increased, with technicals being positive as we have gone through. Now, given that hedge fund activity has increased, we can see on this article on Barron's that big pensions sold GameStop stock and it bought Moderna and Ford shares. So we can see that positions are increasing for the Moderna stock, which gives us a positive signal in that it could still be a buy. So what do you guys think of Moderna stock? Do you think it's a buy, a sell, or a hold? Leave your thoughts in the comments below. Do you also think that Moderna's stock performance and share price is heavily correlated with how long the pandemic will continue? And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. I'll see you guys in the next video. Bye!